Good morning. It is Friday, April 10th. Hard to believe that we're this far into April already. Wow, time just flies. It's crazy. You can see here clearly on the charts the markets actually did something unusual yesterday, and we actually had a rally into the close as opposed to an end-of-day sell-off, which is kind of interesting. I had a conversation yesterday with a pretty experienced trader, and she had made a comment that most of the volatility is normally in the morning. And I want to preface what I mean by volatility. What I basically mean is the best opportunity to take advantage of volatility. Because if you do your game planning overnight and into the morning, you should have a fairly good sense of what you want to look at and what you anticipate happening in the market. That's a very, very big thing for new traders to learn, or any trader really. You should have a really good idea of what you expect to happen the first 90 minutes, and then you game plan those 90 minutes. It seems to be that the afternoon has been offering the better opportunity. The market has been chopping around in the morning, right in through midday, and then the afternoon has been kicking in with the trend. The problem for a lot of traders is that we have a longer term bias to the upside, and the most recent good trend activity for the last 2 hours of the day has been to the downside. So there's many traders who are looking for a long in a bullish environment, looking for that afternoon market sell-off to find a bottom and rally into the close like we had yesterday. So what's ended up happening now is a lot of traders are gun shy, and if you don't understand that, I'll flat out call you out on it. You've never traded before, because it definitely affects your mentality. There's not a question. You get to the point where you hesitate, you're taking profits too quickly. It just happens. We're all human. Well, most of us. Some of us are all, computers are so relevant today. We're not all. I guess I take that back. We're not all human. So that's really where the battle is for a trader. It's sticking to your plan no matter what. And eventually getting to the point where you've made enough money when the market was good, or I should say the opportunities matched your strategy, so that you're not pressing to make something happen when it's not there. So in other words, if the market's long-term bullish but intraday selling off, you're not as inclined to be aggressively looking for spots to get long, because you're frustrated. You're pushing it with a little bit more aggressive share size than you probably should. One of the best trader educators that I've ever seen, which is Rob Smith, who we've done the recent Traders on Fire podcast. He has a phenomenal way of resetting his intraday trading expectation to not do anything until the longer term trend is actually in sync with the intraday trend, or I should say the other way around. I don't want to give away the way he does it. You tune into that podcast and you'll get a pretty good idea of what he does. I actually mentioned it about halfway into the podcast, but you need a way to identify what's going on when the market opens, and then ultimately after that first flurry of buying activity, you must have a way of determining there is something to do or there isn't after that. So for the sake of all the new traders that have been writing in and asking about game planning, I'm going to stick to a set list of stocks today, just to go over whether or not there is opportunities, and then as we progress together, we'll actually get a little bit more in depth into some of the other stuff you might see on the screen here. And again, I want to preface it. This is finviz.com. I don't get paid for this. I'm just showing you what I use. It's the free service in FinViz. To me, it just does everything I need it to do, and whether you use it or not, that's fine. I'm not telling you to use it. I'm just showing you where everything is in one nice, neat little free package. So going over to Screener, as I had said, I have, that proves I have the free one. Go over to presets, and again, my stock list 1 and 2 here. This is essentially, I made a list of 98 of the top holdings of the major ETFs. That's it. They have a certain amount of liquidity. Okay, you can see the liquidity there on the screen. A certain amount of intraday price activity. So I'm trading old school trading, where I'm looking for the best sectors and I am looking for the best stocks in those sectors, which, whether it's William O'Neill or Gerald Loeb, whatever trading philosophy you want to read going back to, back in the day, all of them say the same thing. It doesn't matter what period in time you're looking at. Trade the leaders in the best sectors, and that's what I've done with this list. I've pulled up as many of the best and largest cap stocks or the largest holdings in the major ETFs. So we're gonna start out with just first identifying which of these stocks are matching what the market's doing right now. And again, whether or not you do this exactly the way I do it, that's up to you. I'm just showing you how I do it, and it's consistent. So we're going to take the 20-day simple moving average as a short-term bias in the direction of the longer-term trend, and we're going to look for it to be trading above the 20-period simple moving average, and that's going to filter out. So we just filtered out basically 16 stocks. Now we're looking at these stocks. We are going to now go to performance, and we are going to sort them by the quarter for the strongest stocks, and we're going to take a look at the charts and see what's going on there to find some opportunities. We're going to filter this down a little bit more, but first, right now, we want to see which of these stocks are in an uptrend matching the longer-term market, and also filtering it down just a little bit further than that to determine which stocks are offering some profit potential as well as possibly some follow-through on yesterday's strong close that we had identified in the market there. So pretty nice bull flag here in Kohl's, KSS. And I'm actually going to zoom back and forth. You can see I'm using all free stuff because I'm not telling you to go out and pay anything. Maybe in the future I will. Right now, no, though. So really clean bull flag here. You can see clearly the 20 EMA is above the 50 EMA on this chart of Kohl's KSS, coinciding with a really clean breakout on the weekly charts here. This is about as perfect as you can get here. Look at that. Wow. Really nice. All right, so Kohl's looks actually pretty good. So you want to go back and forth, and you want to basically align profit potential. And this KSS chart looks really, really clean. Aetna, I'm going to go out, and it looks like it's a nice little wedge there, AET. Yep, actually a really clean pennant. Very clean pennant. I just finished drawing that one in there. And yes, I'm going through that piece of price action. Yes, that was 1 day's price action. Yes, you're not supposed to go through there. I'm just giving you an idea. And I wrote a long post about this. Chart patterns tell us what's going on in institutional order flow, and there's limited amount of faith is not the right word. Credence, for lack of a better way of putting it. This is one little blip in price action versus, almost a month worth of price action. Yes, it definitely traded down there, but to me that's a pennant. Period. I'm not, I don't want to debate that. That's a pennant to me. It's starting out with a wider volatility, contracting into where we can expect a breakout from that level. So I like those two so far. Kohl's, Aetna setting up pretty good there. Aetna is a breakout trade though, so be aware of that. You have to be patient and let it break out there. Now this year interesting. Halliburton, BHI, the sectors are bouncing a little bit, and they're actually bouncing with a little bit of volume, but those are not uptrends. I can't stress that enough. If you get involved in those stocks, you're getting involved early, okay, which by the very definition is not an uptrend, which moves it down your list away from an A-plus trade, lower down into something else, which is a wait and see on that one. Time Warner, wow, that's a nice rally into resistance there, TWC. Right here. Again, be patient. It just had a nice move higher. You want to wait for it to get through there, but read the article I wrote today about setting up a game plan. Wow, that's a nice move. I would not be looking to trade that stock long, but I would absolutely, and let me preface this. I'm talking about not being long that stock now. That's the point. It's a great momentum move over the last 6 or 7 days. Let it consolidate up around this 160 level and then look to see if it breaks out. But again, you have to game plan for longer term stuff. Starbucks actually forming a head and shoulders top here. Let's actually zoom that out a little bit. See that? Shoulder, shoulder, possibly a shoulder. Still an uptrend. Still clearly want to be long. But now we have a neckline for a potential head and shoulders top there. So basically that 45, 60 level, or whatever, I didn't draw it exact there, but basically 45, 75 in that area would be the neckline. If you wanted to get, completely technical, you draw a trend line that way. Those are technically the neck point. Maybe do it a little bit higher, which will coincide with the 50 simple moving average. Let's see what else we got here. Target in line with Kohl's. Looks pretty good there. Honeywell consolidating. And again, we're looking for existing uptrends with room to go. All right, so that's the first of those lists. Now we're going to scan a little bit deeper. We're going to go change from the open up 2%, and we want to see which of those. Now there's only 5 of those, so we want to coincide really strong day yesterday, which is a 2% change from the open on that candle, which is a stronger green candle coinciding with what we have as bullish stocks. GE actually looking pretty good there. Pretty solid green trend day yesterday in GE. And again, I'm not interpreting the news here, guys. If there's news, do that on your own. This is mostly technical setups here, or I shouldn't say that. 100% technical setups. Do your own research on the news. Very good trend day, really good volume in GE yesterday. Okay, so now we're going to shoot over to the second list. I'll just go back to the screener. Go back to list number 2. Same thing, 48 stocks. We are going to sort them by click over to all, pull up the 20-period simple moving average, look for them to be above the 20, and look at that, we pulled out 24 stocks. So we're going to take a quick look at those stocks right now. Actually, you know what, I want to sort them by performance first over the last quarter. Again, just if it's new to you, quarter, I'm just looking at it from a earnings season by earnings season perspective. That's how they report. That's how we're going to trade them. Let's see. ALTR, pretty decent volume yesterday. And a pretty nice breakout from 30 there on that volume as well, obviously. Toll Brothers, pretty good. And what else? Lennar in a pullback. A little different section. Seeing it, Toll Brothers did not pull back like Lennar did, so quick little lesson there. Actually, let me show it there. Pull it back in. Toll Brothers has some relative strength relative to Lennar, so definitely something to keep an eye on there. And let's see, scrolling down, scrolling down. Possible trend line break here in Verizon. Macy's pulled back hard yesterday. We were actually looking at that one. Really good setup. And actually, let's take a quick look at that Macy's chart. Pulling back to what is now perceived support. So let's actually take a look at that. So this 68 level should be support. And obviously, you don't want to see a stock pull back that hard. One big green followed by one big red is, in that case, it's kind of like a standard technical rule. The second one of two large consecutive candles like that in the opposite direction, usually the second one comes in play. So if you were long on that breakout and it pulls back in, I wouldn't give it too much room here. You're better off reducing risk a little bit, or maybe even getting out of the trade and re-entering if it gets back above there. There's no sense in letting this pull all the way back down. Look at the size of that candle on the weekly. All right. So we'll continue to scroll down, and those are the best on the long side there in that short list. Let's just filter it out one more time and go 2% from the open. And out of all of those, looks like ALTR is the best opportunity there, ALTR. So that's the game plan for today. Pretty decent list of stocks. Maybe next time we will look at some stocks on the short side right now, but the market's opening relatively flat to higher right now, so let's stick to what the market's doing, and we'll take it from there.